Hey guys, welcome to this video. In this one, I'm going to talk to you about what I would call the big short. Now, much like the film, there is a time where people are saying, this is going to keep going up and up and up and up and up and up and up. And eventually something happens, something really interesting happens where the market just implodes and swallows in on itself. And really, you don't have to be Einstein to work this out. So you can see the data that I've got on my chart when I go on a yearly chart comes to 1972. And that's as far as we can stretch back. And just after 1972, okay, 7 years, 7 or 8 years later, this enormous move comes up. And what you'll notice is within the next year, it gets absolutely slammed. Okay. Now, once that happens, it really allows you to think, okay, well, I've just seen the price get absolutely creamed here before. Okay. So I know that sellers are looking in the market. Even though it was 1980, I know that this is an area which we can all define as a high price. Now, that is a high price for a very simple reason. And the reason is because if you look at the chart here, okay, if you look at the chart we've got, that is the highest point the price ever got. So you can't deny that that is a high price because it's the highest it's ever been, right? So you then ask yourself, okay, well, if I'm a good trader and I want to make money in the markets, do I want to sell where there is a low price? Okay. Or do I want to sell where there is a high price? And hopefully, I'm hoping, perhaps after watching me on TradingView for a long time, you're realizing that it's a little bit better to sell high, okay, and buy low because those low prices, which I've just labeled here, they are your lowest price and they are where you want to be buying. So anywhere nearer to that, okay, is going to constitute your long. But anywhere back up near this previous high where price got absolutely creamed, and you can see that it went from 151 all the way to 113, is going to be your exit area. Now, in other simple terms, look at these moving averages here. The ones I've just circled, that's my 20 and my 40 moving average. Look how far away that is, okay? That is really, really far. If you look probably in the middle of them, okay, nearer to this support, you're looking at 1035. And that's a long way off from 155, okay? That's 50%. So you've gone 50% up from your moving averages. So it's a crying out, it's a screaming out short. This asset, this FX pair wants to be sold. And in my opinion, I fully expect that somewhere in the nearish future, it's going to implode. It's going to get absolutely creamed, much like you saw with the dollar yen. We called that absolutely amazingly. Everyone said, no, it's going up forever. It will never come down. And lo and behold, it gets absolutely wasted. So that is my opinion for the Swiss yen. Okay, we're looking short. And just remember, everything has to come down. What goes up comes down in the end. There is just no stopping it whatsoever. You just can't stop it from happening. So thanks for watching, guys. Hope that really helps. As always, if you want to trade reality, get things right, just jump in the description of this video and click the link and we will get you set up right away. So let's keep an eye on the Swiss yen. Let's see what happens and we'll scale in short to the market now for those falls. See you there, guys.